Hi and welcome again to Kotak Securities Weekly Fundamental Podcast. I am Rini Mehta. First of all, thank you all for tuning in every week. Hope you find our podcasts useful. Do share your feedback with us in the comment section below. Now, without any further ado, let's jump right in. So, Indian stock markets corrected last week in line with global market sell-off. Basically, rise in the US bond yields and expected tightening of monetary policy by central banks is weighing on investor sentiments. The 10-year US Treasury yield moved higher last week, hitting 2-year high, and Sensex Nifty corrected by around 3%. On the other hand, despite weak markets, the BSE small cap index hit a new high and outperformed the large indices last week. Meanwhile, in line with broader markets, most sectors saw profit booking, but IT sector performed poorly with negative returns of around 6%. So if we talk about other indicators, crude oil prices continues to march forward with Brent crude inching closer towards $90 per barrel levels. And FIIs turned out to be net sellers in the January month till date in India. Again, inflationary pressure, monetary policy tightening, rising bond yields, higher crude oil prices are some key challenges for the global markets, and we expect FPI flows to emerging markets including India to remain volatile. Additionally, going forward, investors would focus on the upcoming union budget, earnings season and state elections in India. Now let's move on to the top stock picks. Our pick of the week is Apollo Hospitals with ad rating and fair value, that is target price of rupees 5,200. Guys, Apollo Hospitals continues to move from strength to strength and is executing well on leveraging its large and widespread existing infrastructure to create a strong digital ecosystem. The positives about the company we see is that with an impending fundraise in health company, we believe Apollo Hospitals can better compete with other e-health players and accelerate its digital journey. Then offline pharmacy stores will continue to be added at a rate of 350 to 400 stores per year. Apollo Hospitals has demonstrated a track record of creating new verticals in the past while the market remains competitive. We are impressed by Apollo Hospitals' execution across segments and raise our FY 22 to 24 EBITDA estimates by 8 to 14%, led by mainly higher growth in pharmacy and healthcare business. We have also raised our multiple for the healthcare business to 24 times versus 22 times earlier, thereby revising fair value to rupees 5,200. Moving on, our another stock pick for you is HDFC Bank with ad rating. HDFC Bank reported 18% year-on-year earnings growth on the back of 11% year-on-year operating profit growth. Impairment ratios broadly showed improvement, suggesting that downside risks appear limited for the bank. The operating performance is weak and the profitability in the retail business is still not back to pre-COVID levels, but near-term earnings growth is likely to see support near lower credit costs as we exit COVID. So we maintain ad rating with an unchanged fair value of rupees 1,740. Guys, for more details on our recommendations, visit the research section of Kotak Securities website or follow us on Telegram and Instagram. That's all for today. See you again next week. Happy investing. Thank you.